Hello, everyone, and welcome to At Barron's. I'm Andy Serwer, and welcome to our guest, Bruce Carnegie-Brown, Chairman of Lloyd's. Bruce, nice to see you.
Very nice to be here.
Most Americans, Bruce, have heard of Lloyd's, but they're probably not sure exactly how it works. Can you explain it to us, please?
So first and foremost, Lloyd's is a marketplace. So we host upward of 80 what we call syndicates, but essentially independent businesses underwriting insurance. They're managed by about 53 different management companies. So some management companies manage more than one syndicate. And collectively, Lloyd's underwrites approximately $60 billion of premium a year, all in the non-life general insurance space. And what everybody also knows about Lloyd's is we've been doing it for more than 300 years.
And so it's more of a marketplace than a company. Who owns it? How does that work?
So it is a marketplace. It's incorporated by law in the UK. Essentially, we mutualize the risk in the marketplace by managing what we call a central fund. So it doesn't matter how big or how small you are in the marketplace, you operate with the same credit rating, with the Lloyd's brand, and you have the benefit of the Lloyd's licenses. So it's a way to equalize the credit risk that is taken in the market between small and large players.
And does the structure have a P&L? What is the capital structure like?
So we aggregate the results of all of the businesses in the marketplace. So that aggregates to about $60 billion of gross written premium. And in 2022, it made an underwriting profit of about $3 billion in aggregate.
$3 billion with a B. And it's not a public company, so you cannot invest in it. We couldn't buy shares in it, could we?
Well, so corporate capital invests in it. 90% of the capital that's in the market comes from corporates. Essentially, most of that comes from other large insurance companies around the world. We also have 10% of the capital provided by individuals. We call them names, and they are high net worth investors. In fact, the whole market was invested by names back in the day, but corporate capital got introduced in the mid to late 1990s. And now is the majority investor in the market.
So insurance and reinsurance. Do you compete against Berkshire Hathaway? Who else would you consider to be your competitors?
Well, so we look at the big global players. Berkshire would clearly be one of those. AIG, Munich Re, Zurich, all of these players around the world would be people we benchmark ourselves against. Some of those players have capital in Lloyd's, so they operate subsidiaries in the Lloyd's market. And typically they do that because Lloyd's is a center for specialist insurance expertise. So that expertise it creates a positive flywheel for specialist business coming into the London market. And so they want to be there because that's where the specialist business flows.
And there are a number of other Lloyd's financial services companies in Britain. Are they related to Lloyd's?
No, so there's only one Lloyd's in the insurance space, all headquartered in the City of London. And then we operate through a series of licenses globally. And actually 50% of our revenues come from the United States. So that is our biggest marketplace on margin.
Right. How is that the case? How did you end up doing so much business in the United States?
Really for historical reasons. Some of it just to do with age. So we've had a record of underwriting firsts over the decades. We underwrote the first automobile insurance, the first airplane insurance, the first satellite launches. Many of these things, of course, invented and developed in the United States. We were famously there in the 1906 earthquake in San Francisco and issued instructions from Lloyd's to California to pay all claims, and this really established a very strong reputation for Lloyd's in the U.S. market that has only grown since.
I want to get back to some of those policies that you write that are kind of unusual and eye-catching. You're kind of famous for that as well. But why don't we take a step back and shift gears a little bit, Bruce, and I ask you about the macroeconomic environment. How does the rate hikes and what's going on in inflation impact the business of Lloyd's?
So there clearly is an impact. Inflation is obviously in our claims numbers, so we have to adjust the premium to take accounting of claims, of inflation in claims. And because this hasn't happened for a while, that's a skill people are needing to relearn. Interest rate hikes are, I think, net good for the insurance industry over time, but not while they're moving up. So while they're moving up, we're obviously making a mark-to-market loss on our investment assets. But as soon as they stabilize, of course, we're beginning to generate revenue off the cash that we're holding to pay our claims. So we have over $100 billion of cash in the Lloyd's market at any point in time ready to pay our claims. and that is now invested for a return for the first time in about 15 years. So actually for the first time, both sides of the balance sheet are beginning to work, the underwriting side of the balance sheet and the investment side of it.
And is there anything about your structure that makes it risky or less risky for the participants?
Well, we like to think that it's less risky because essentially by co-hosting a series of businesses, risk can be shared in the marketplace. And so we do a lot of syndicated risk in the marketplace that allows us to write larger lines of business but have those risks be shared amongst different market participants. We also reinsure other insurance businesses outside the marketplace. So it's the diversification of what we do is clearly a mitigation to risk in insurance, and we try to manage that at the center in terms of the aggregation of risk versus the capital that we have. So all of the businesses provide plans to Lloyd's at the end of each year for the following year in terms of the business that they want to write, by line of business, by geography, and then we form our own assessment about whether there's capital sufficient to support that.
Looking on your Wikipedia page, you do have this illustrious history, a lot of triumphs, some blemishes as well. Is there anything about your structure that would lead to certain problems historically? Well,
I hope not, but you don't know what you don't know. And so 3 risks we particularly call out at the moment as being systemic in nature are pandemic. We've all been through that, so we understand the nature of that. Climate, we think, is increasingly a systemic risk. And cyber. And one of the characteristics of insurance typically is the risks that we protect are most often limited by time and geography. So a hurricane blows through Florida, but it's only blowing through Florida and it only lasts a certain period of time. When you look at risks like cyber or climate, these can be everywhere at the same time, as we saw with the pandemic.
Well, let's talk about climate then, Bruce. I mean, how are you insuring against that, and what sort of policies are you writing?
We write policies across pretty much all climate risk, including things like earthquake that aren't necessarily directly related to climate, but certainly windstorms, flood, drought, wildfire, and to some extent, because these are theoretically limited by geography, if you write a lot of this business, you're spreading your risk and you're hoping that essentially it's not all going to happen at the same time. And we've been doing that for a couple of hundred years. So we model these risks. We put out realistic disaster scenarios for worst case outcomes and try to make sure we've got the capital to support the claims we will end up paying.
And just to follow up on that with climate, are you writing more policies than ever, and have the premiums gone up?
So about 25% of the capital at Lloyd's is committed to natural catastrophe insurance of one kind or another around the world. Biggest risk for us geographically is the United States. And prices have certainly increased over the last, actually we would see 21 quarters of average price increases. And this is largely because we are observing greater frequency and severity of incident and therefore of claims.
In that climate or natural disaster arena. Okay. What about innovation? Are you using technology in different ways, that being brought to bear in your business?
So innovation is incredibly important to insurance. I don't think as an industry we do as good a job as we should. And so this is about being relevant to the changing risks that our customers face. And so at Lloyd's, as I mentioned before, we do have a proud history of innovation, and we're trying to build on that. And we set up something called the Lloyd's Innovation Laboratory 4 years ago, and we've now had 100 separate insurtech businesses come through that in the last 4 years, helping them to scale up. We give them direct access to the marketplace to try to sell their services or products, and then to the extent they need insurance capacity to support their business models, we try to offer that through the syndicates at Lloyd's. And we've got some really quite attractive success stories developing from that, but some of them are also around things like new technologies in energy, for instance. So we have a pilot project going at the moment around green hydrogen. That's potentially a really attractive new energy source. What we also know is that it's quite combustible, and so we need to put it in a form where it's safe and therefore insurable, as an example. Nuclear power is quite interesting. We do quite a lot of nuclear risk at Lloyd's. It's sort of a bit binary, so it's actually a very good business until it isn't, and so we spend time trying to figure out how we can provide increased capacity to support greater investment in nuclear energy at the moment without jeopardizing the soundness and security of the market.
Wow, did you ever have exposure to 3 Mile Island or Fukushima or Chernobyl, any of those?
So 3 Mile Island, yes. Fukushima on a contingent or reinsured basis, not Chernobyl.
One risk we didn't discuss, or haven't discussed, I should say, is political. Does that enter into your business at all?
Yes, so geopolitical risks are very substantial for us. We've a long history of underwriting terrorism kinds of risks, but also war risks. So Ukraine was a big loss for us in 2022, mostly because of the trapped aircraft in Russia. So we provide contingent policies there, interestingly. The primary insurance is between the airline and a Russian insurer, and then we provide contingent insurance to the lessors, which many of which are based in Ireland and that actually own the underlying asset. So we've taken a provision against quite substantial losses for those aircraft.
A little bit about you, Bruce. I saw from your bio that you worked at J.P. Morgan, Bank of America, Marsh & McLennan. What's the difference between working at an American financial services firm and one based in the UK?
Well, I think probably less and less of a difference. So certainly back in the day, I think American financial services organizations were much more progressive and ambitious. UK financial services organizations historically more hierarchical, probably more cautious and conservative, less innovative. But I think there's been a huge convergence of capital markets. They're genuinely global these days. But of course, in most lines, insurance being one, banking being a second, these industries are dominated by American players. And I think they occupy a well-earned leadership position in those markets.
Well, that's very nice of you to say. So I want to ask you about England a little bit more and of course, get the latest on the economy. Several years out now from Brexit. Where do things stand?
Well, we've been through a pretty tortured process, as any observer will know. We've had several governments. We've had people wrestling with the impacts of Brexit and what the relationship should be with the European Union. I think this has been a source of huge frustration for business within the UK economy. I think we've got a pretty sensible government in place now looking at trying to ease the competitiveness of the UK economy internationally. But they have a relatively limited lifespan. They have to hold an election by the end of 2024. And whether they have enough time to deliver on what they're now focused on against some of the more disruptive behaviors we've seen in this government in the last few years in time for the election is very uncertain. So many commentators and observers in the UK see this as being quite a close election when it comes in a little over 15 months' time. And it'll be interesting to see where we go from there. Now, a bit like the United States, we've so far avoided recession, but the direction in terms of growth is still very clouded.
Maybe it's good that we haven't seen a lot of headlines about Rishi Sunak here in the United States, right? That's probably a good thing.
Well, I think he's very technocratic, actually, and what I quite like about him is he doesn't grandstand. He's in the operations, focused on getting things done, and only ends up sort of front of house when he's got something to announce and or deliver. And I think that technocratic approach aligns quite well with the way business operates. And so, as I say, I think he's doing the right things, but he's inheriting quite a mess.
Right. And as far as the city, which is the Wall Street of London goes, we've heard stories about American companies or other countries, banks moving to Europe. Has that really happened? What is it like in the city right now?
So the city is still the preeminent financial center for European capital, and indeed, I think rivals New York globally as a capital center. And I don't anticipate that really changing. Just the degree of infrastructure and investment that exists there makes it very difficult for anywhere else in Europe directly to compete. But there are some barriers that have crept in as a result of Brexit that have caused people to have to re-domicile some of their European Union business within the European Union, and therefore moving it away from the United Kingdom. So far in terms of jobs and the like, it's been reasonably small, but I don't think any of us are complacent about the need to make sure that London is competitive to retain the commercial advantages it currently enjoys.
I told you I wanted to loop back and ask you, Bruce, about some of the more interesting things that Lloyd's underwrites and insures. Can you tick some of those off for us, please?
Well, we do some quirky things. Legs are things that come up a lot.
Legs?
Yes. Rudolf Nureyev, Michael Flatley, the dancer, David Beckham, the footballer. These kinds of things go through, and they're sort of fun to do, but they're not really what Lloyd's is all about. And so Lloyd's has something of a mythology around it that we will insure anything. That's not precisely true. We try to insure good risks rather than bad risks. But we definitely have quirky things that come through the market, and we try to put a price on them.
Gosh, I'd love to know what you rejected. Anything you want to tell us about?
I don't think so.
I bet you there's some interesting things. I know there's, American athletes and movie stars along those kind of lines as
Legs,
well.
Usain Bolt's legs.
Legs. And final question, Bruce, and that is, where do you hope to see Lloyd's 5, 10, 15 years from now? Where do you hope to take you in the leadership there?
Well, we've been doing quite a lot of remediation at Lloyd's. I think we were underperforming as an insurance enterprise over the last few years. I think we put performance in a good place, and so we have an ambition to grow. Now, that's easy to do in insurance, but to grow profitably is a whole lot harder. But we think we've earned the right to grow now. And what looks like a very old marketplace and an old platform, I think can be repurposed to be, I sometimes use the term, the Amazon of insurance. So our ability to host capital, to have expertise centered in Lloyd's, and to provide that capital and that expertise to businesses around the world is a real opportunity for us. And so we need to double down on investing in digital data. What we all know is that data needs to be digital first. That hasn't always been the case in our industry, and we have a project to try to develop that in Lloyd's. And that data will enable us to be faster, cheaper, better at the underwriting that we do, and therefore to offer a better service proposition to our customers. And back to where we started the conversation, innovation is part of that because the risks of our customers are changing. We have to try to provide new and different services to them, taking the volatility off their balance sheet onto ours. So the simple example which people often use is, an organization like Uber is a taxi company, but it owns no taxis, and Airbnb is a hotel company that owns no hotels. And so if you're good at insuring taxis and hotels, you're not much good to Uber and Airbnb. So how is it that we can help them manage the risks that they face in their business?
Some metaphors with the new tech companies out there, right?
For sure.
Bruce Carnegie-Brown, Chairman of Lloyd's, thank you so much for your time, and best of luck to you.
Thank you.
You've been watching At Barron's. I'm Andy Serwer. We'll see you next time.